Okay, traders, good morning. Welcome to this live intraday strategy webinar. Today is Tuesday, September 28th. Mike Boutros with you on the horn. Hey, great. See you, Jay, Steve, everyone in the room. It's been an interesting start to the week. It's been an awesome couple of days. We've gotten the return of volatility. The dollar just on a tear, continuing today. I was thinking we'd get a little pullback as we start off the week, but man, it's continuing to plow through. Not across the board though, and you're seeing also some more profound, significant moves, specifically in sterling and Kiwi today. We'll go over those, but a mixed picture for sure. So on the menu, DXY, Euro, dollar, yen with a massive breakout, gold, crude. Take a quick look at the 10-year, which is what everyone is talking about this morning. Sterling, Aussie, dollar CAD, SPX, and we'll take a look at Kiwi. I'm not involved there, but we'll take a look at those levels on the back of this break. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. Good morning to you as well. Let's jump right in, guys. So here is what we started with. I'll show you the DXY first. This is from last week. I just want to show you how this panned out. So the major level of resistance that we were talking about is 93.45 into 93.40. It's the November high day close and the high day close for this year. You're seeing it right here on the weekly chart. We're plowing through that now. This was the formation that I was working with last week to see if we would crack uptrend support. This held. Literally, we rallied up into this pitchfork. That held for a while until it broke, and here we are on our way up. So dollar has been relentless, okay? This is still the yearly range highs. It's still the 100% extension from the ascent off the yearly low. That's 93.76. And you still have that low we closed from 2016 major pivot at 93.88. So we got a lot of levels on hand here on the DXY. It's the weekly chart, right? Not out of the woods until we get a close above 93.88. So upcoming, not too far off from where we are now. Here's what it looks like on the daily. Okay, that's last month's high. Here's the high day close, which was at the November high from the previous year. And you can see again, nice resistance there. Here's the pop. Got to mount a close above this. If we do, there's nothing until 94.26. I don't have anything in between this range right here. So I'm looking for inflection. If you're holding dollar longs, that's a position. Do something there. Maybe take a little off the table if you're holding that. Bring stops to break even or better. If you're looking for new positioning, here's the pivot. Here's the pivot. We need to either see a pivot above this to keep the long bias viable, approaching 94.26, or if we get the washout, that's near-term support. Here's what it looks like on the scalp. And I wanted to bring this back into view. I left this on here on purpose just to show you, again, the side-by-side of how this panned out. That held. The rally failed. Here's FOMC. Pulled right back. It held again. Downtrend resistance for a whole day into the open of this week. Pop higher. This, now null and void. We're just in the uptrend. Confluence resistance at the 2021 high at 93.72. Looking for something here. So that is the DXY, really stretching to the extreme here, okay? Even the intraday chart is now probing into the overbought condition. Last time we saw that breach into the overbought condition was the upside vault that you got through that 618, which was support, right? So you can envision a scenario again, if this were to break today, you would expect to see a breach above overbought conditions, an accelerated rally. The upper slope comes in right around the 94 handle. And then again, 94.20 is where you start to run into your first lateral zone of resistance. But as it stands right now, we're coming into resistance into the US Open. So check this out at the yearly high at 93.72. Questions on dollar? All right, so here's where Euro stands at this point. And the risky part of this, by my part, is where we are in the weekly charts, right? The 38.2, the entire rally from last year's low, is where we've been sitting. That was 1694. We tagged that almost 4 times this year. Here's another attempt at a break below. Note this slope here. Support, support. We're still basically there. Again, it's kind of like that hesitation. I don't want to continue to chase this at this point. So look, I've been flat on euro. I've been trying to get a position in sideways in this thing. Again, I just haven't been able to. There's just been no bounce. It's just been a one directional trade. And I don't want to chase it. So watch out. You know, if you're holding euro shorts, guys, as long as you're below 1694 on this thrust, it's actually all right. But if we were to close back above this for the week, you know, it could be one of these. It could be one of these. You could get another couple, you know, another bounce off this level. Just watch the close. This is from the weekly chart. You're sitting at 40, right? We haven't been able to crack 40 all year long. So if euro is going to make that break, we finally see that break sub 40, behavioral change in the momentum profile. You'd be looking for a 16 clip pretty quick, pretty quick. So that's my hesitation on the euro with where we stand right now. We don't have that much data on tap until we get into Friday, basically. We get the core inflation read out of the Eurozone and the core PCE numbers here out of the US. So I don't know if we get that to be the catalyst, but here's the approach of DXY into resistance. Here's the approach into euro, into support. 1663, that's the objective swing low from August. No change to any of those levels. This was that support zone that we were looking for in the euro. Bam, we opened the week, dropped below. Not the cleanest pivot, but a pivot nonetheless. 1663 is the actual low. So here's the daily chart. Bring this up first. Essentially, we're still inside the August range. No change to any of that. Just sitting at the lows. Now again, the focus is on if this holds resistance, if we buckle below it and it holds resistance, that's what this is. You're still looking for that drop towards 1663. Key support 1620s into the 16 handle. But watch this as we close out the month. This is my concern. You know, you got the last 2 days of the trading month. Things get real wicked, right? You start to get those portfolio rebalancing, position rejammering. It gets all messy and grimy. So just be careful. But all things held constant, below 1694, you're essentially still looking for that 1660 clip and beyond. Any questions on euro? Inflation data out of the Eurozone and the US on Friday. So likely to be the catalyst. We could get a kick here. That is number 2. Number 3 is actually something that's been moving, and that is, believe it or not, the abomination. So yesterday, we highlighted that we had affirmed that it was a clear-cut breakout. We got that on Friday when we got the breach above that 110.50 region, the August high day close, the 618 retracement, popped above it, then into the weekly open, tested it as support and moved higher. Now you were seeing some divergence, so I was worried about a little bit of a kickback here, but at the end of the day, a breach of uptrend resistance likely to fuel the sharpest part of the rally. We got that yesterday. Here's dollar yen now. So you're on tap with that first initial target at 111.60, 111.59. We're about to clip that right now. Looking for possible inflection here. The big resistance zone is a little bit higher at 112, at 111.98 into 112.17, this zone. But I wouldn't be too surprised if I do get some sort of kickback off this region. Again, just the swing highs from back here in July. And then if we take it back all the way, let's go back to the daily chart. Here's 1160. 'Twas the reversal close. After the high day was registered last year in February, the reversal close, 1160, caught resistance the following month in March. Here we are again. Resistance in July. Checking it right now. The big zone is right here. So I don't, again, one of those trades where if you're holding it, bring up your stops, kick out your limits to 111.60. 111.98 is your next limit. My problem with this, or my concern with this, is that you're working on the back of a 5-day advance now in a 2.27% rally in just, you know, again, just 5 days or 4 days actually. 1, 2, 3, 4, yeah. So use some caution here. The exhaustion is likely to be mean when you do get it. On the pullback, you'd want to see support at 111, 112, 111.98. That's really your big zone of resistance. So again, even though that broke, right, the breach of uptrend resistance, this is a good example of something that we always talk about, that break of uptrend resistance, another thrust. As you clear out those short hands, you get that buying cascade effect, pushing price higher. Questions on dollar yen. What a breakout. What a breakout. Here's dollar yen, by the way, on the weekly chart, just to show you the magnitude of what we're doing right now. It's big. It's big. So if we go back all the way to this, for this weekly chart, the main focus region we've been talking about literally since the start of the year has been the same region, the two targets we just talked about, 1160, and that stretches into 1198, 112. So this whole zone is treacherous. Be careful. If you're holding long positions, again, I'd be taking a little off the table here. Stops to break even. You need to see a breach with some acceleration, mind you, above 112 to really keep this thing going. But this is a pretty major inflection point for dollar yen. Questions on the abomination. Now, in the background with all this happening, I'm going to take a quick jump over. This is number 3, to the yields, which I also covered on this update. And that's just a kind of note, this is a broad-based move we're seeing across the board. Here is the major resistance zone that we were talking about in yields, 152, 152.8. This had seen a massive breakout with that break last week above 143. For me, that was huge. Okay. And if you just look at this side-by-side comparison, guys, for the last couple of months of price action in the 10-year yield, this is price action in dollar yen. Who was telling the truth first? Looks like yields were leading. Here's what the 10-year looks like now. Right? Sensational. So we're at resistance, okay? And that resistance is the slope that we highlighted yesterday. This is a basic slope off resistance from the yearly highs. That's all I'm looking at. Just beyond that, 152, that's key resistance. You got the 618 retracement of the entire decline. You got the swing lows that you made here from that April drop, the pivot break, uptrend resistance, all right here at 152. So while I do like yields higher, I do think this story is a fundamental shift, if you will, in the technicals as I see it. That was a break. That was a break. Jay says, I think the chart is not moving. What you talking about? My chart? Jay says it's moving for me. Or Kay says it's moving for me. Yes, yeah. No, it's moving. That's a pretty major breakout. No, it's today's date. So use some caution here, guys. But my point being is, with yields doing this, the interesting thing is what we saw in stock. And I don't want to go out of order here, so we'll come back to that. But dollar yen, very indicative of what we saw here in yields, right? So yields are at a major inflection point as well. 152 is the break that you need on the upside. Beyond that, other tells, and sort of yesterday's update, I was like a little kid in a candy shop. I wanted to write even more, but I don't want to go all over the place. Also gold. Man, what a huge region. Here's gold on the weekly charts, guys. Here's gold now. You can't make this stuff up. This is huge. 1738, 1747. We talked about this pivot zone on the way up, on the way down, 618 of the recent rally. We've been sitting there as support for the last 2 weeks. What's this? So sliding parallel, this is just the same slope, guys, that we've been following all of these parallels. You can see some inflection. That comes in maybe a little lower, near like 1716, 1715. But boy, if this settles a daily close below this region, that's really problematic. Now, mind you, again, this is putting in its 4th down week in a row. Momentum at 40. Man, just can't help think this is going to be either some major fake out or we're in real trouble for the gold bulls. Here's what gold looks like now on the daily chart. So I updated this slope, guys. And I told you I didn't really have too much conviction on it. It's either this slope I was working with, which gives you the much crisper inflection points, and that's basically calling big trouble here. Or if we go to the actual stretch low for the year, it basically suggests we're at support right now. Either way, this is huge. The low day close from August gives you 1729. We're testing that right now. If it breaks, you got another accelerated down drop towards 1712, 1707, just within the confines of this channel even. That's support, right? 2-hour chart looks like this. This pitchfork that we added yesterday off the highs has been in play. It kept governing basically the weekly opening range high, which is why we put our near-term bearish inval off these marks. Decent levels I thought would be a decent entry, kind of like what we got here, kind of like what we got here, to play another move down, but we didn't even get the bounce. So here's the break. This is key support, guys. Even on the near-term front, if it breaks, remember we just talked about 1717 or 1716 on the daily chart. Here's 1717, the actual swing low from that August rally off the lows. That hits the lower parallel, basically into trade tonight. So I wouldn't necessarily, I see that. Yeah, I wouldn't necessarily say it's a break of the weekly opening range. The only reason I would say that is because it's so early. We're on Tuesday. Now you did have a range Monday. I see why you'd think that, but it's just too early. Not to mention that you're not even going to get a full weekly opening range play this week because we're only up on Thursday and then we start a new month. So that kind of throws a wrench there. Watch today's close with respect to this region. Okay. Now the weekly open is now near term bearish inval. We dropped that down to basically 1750. And as long as 1750 holds, this 38.2 is now null and void, guys, because that was using this low. So we're going to go ahead and drop that. These are now your levels of interest. Questions on gold? Man, the dollar's just ripping. Keeps the focus higher. Man, if this breaks 1717, guys, next level on the downside here for gold. All right, 1, 2, 3, 4. This is number 5. I got to pick up the pace here. Okay, so, and get a new pen. So, crude oil. The 10 years now 5.4. Wow. Okay, we just got the extension, didn't we? Maybe you're right. Maybe my chart isn't updating. Nope, it's the same feed I'm looking at. Okay, yeah, I do see a couple feet. My Bloomberg terminal is showing a little bit higher from this. So TVC might not have popped on yet, but that's a good play then. Dollar yen should keep the upside in step then. Watch this 1160 clip. All right, the other thing I want to go over is crude from last night's update, and this is pretty huge as well. So guys, you can't make this stuff either. We were talking about crude and we talked about it being a clear breakout, and the breakout had not only cleared but broken and closed above major lateral resistance. The first of those zones was 74.26 into 74.90. That was huge for me. That's the 2018 high we closed, the 2011 lows, major pivot in price. And then the next level is 76.42. And these are the two levels I'm focused on right now. One of them is 100% extension from just the near-term low, 76.42. We're testing that now. The other one is the longer dated 100% extension from the washout we got last year. Now, I just have to preface this every time I show you this extension by telling you I don't like using any measured tools off the low from April of last year. Again, that was the 0 clip on the futures markets, on the CFDs markets. Again, if you were trading spot, that went negative, right, last year with that huge watch out. So I don't really want to stress any measurements off that pivot point of the zero price scalp. That being said, right, you're at now 100% extension from the ascent off just the lows you made back last month, the swing highs they made for the year, and then that 100. So you're basically looking at a treacherous zone here between 76.42 and 77.37. That includes all three of those technical developments there. So I do think near term, and it might be crazy for me to say this, but I do think near term you do need to watch out for exhaustion in crude. It's been a phenomenal rally, but we're coming at some serious levels here. Okay, so the update and my last update wanted to really just highlight this on the daily chart, but really it was the intraday chart that looked very interesting. Notice the channeling action you've seen within the broader ascent. Kept the focus higher immediately while above 74.26. Again, 76.42 is that first level of interest on the upside. We just clipped it. So one of those trades where if you're in it, take a little off the table, bring your stops to break even or better. Next level on the upside, 77.37. That converges on slope basically into the close of the week. No, I'm sorry, into the close of the month. But you know, you're marking divergence. You're about to clip back below 100. Yeah, I wouldn't be too surprised if we get a setback towards like 74, 74, 75. Wouldn't be outside the realm of possibility. But you're still in the constructive onset of this advance. So ran to the first target. Again, near-term support, 74.26. Bullish inval at this point. I'm willing to bring that right up to the weekly open. And we're looking for the extension. Big resistance here. Anything northbound of 77.37, guys, we got to rework the whole thing because that's likely to be a massive breakout, an accelerated rally. In fact, if you go back to the weekly charts here. Also, guys, what am I looking at? Check this out. What is this? The 2018 highs. Right there, it's 76.87. It's just a mess. Watch out, okay? Big resistance for crude oil. Let me just go backwards here, guys. I just want to take a look at the weekly charts. Yeah, we have it all mapped out right here. It's the same region. Big resistance. 2012 low, 2011 low, that 100% extension, the highs we made in 2018. It's littered, looking for major inflection off this zone. By the way, how many days up is that? How many weeks up is that? That's 6 weeks up. Last time 6 weeks up we saw was right here. Stop traffic, that was the high. Previous to that was right here. That didn't call a high, but it certainly governed the high for a 2-week span. Previous to that was right here. That was a single day pause before you continued. So it's good to do these references to show you that in actuality, doesn't necessarily mean it's going to be a full washout, right? It might be something like this where it's just a couple of days or a couple of weeks rather of just breathers before the continuation. But certainly you've seen that this, 6-day stretch has been pretty important in the last couple of times. I mean, most notably is going to be this one, and this one was 5, but both of them calling intraday, near-term highs in price. Look for a pivot here. Big resistance on crude. Any questions? No change to any of those levels from last night's update on crude. All right, it's number 6. Sterling. The other biggest mover of the session so far has been British pound. I know Jamie was looking for a bigger bounce here on a hold. I was looking through the headlines, guys, trying to find something major that actually triggered the event. It's insane. This is a pretty big washout. So let's go back to the weekly charts. Let's start right here. And yesterday, or the last update I gave you guys on this was right here. Okay. So I'll show you the intraday charts here in a moment, but here's the weekly. The slope that we were talking about in yesterday's webinar, if you were with me on Daily FX, I was talking about that red parallel, which has been a decent pivot, caught all the lows so far this year. The low we made in July, the low we made in August, and then once again here in the low we made last week. If this pivot break is legit, you're looking for 34.94, which is a 2017 high week reversal close, major pivot in price, 2019 highs, last year's swing highs before the break. That's pretty big. Unfortunately, beyond that, you're looking at the yearly low, just a little bit lower, 34.60s. The big support zone risks this. That's 133. So like 300 pips, 200 pips from here. So it's problematic, this break for sterling, and that's why this week is going to be really paramount to see how we close. Now, momentum is going to threaten its largest and deepest cut since last year's low. And this is the first time we're going to see a break below 40 in momentum since that low registered. So a change in behavior as well. Watch this into the close of trade this week. We'll go over this again on Thursday, but boy, oh boy, that's pretty big. Here's what sterling looks like on the daily chart. This near-term consolidation, we highlighted this as well. Higher lows, lower highs. Just below downtrend resistance. Last week, we rallied into the objective monthly open that held. We talked about that again, really putting the onus on this key pivot point at 36.25 into 36.46. That's the objective yearly open. That's a serious break, guys. And if we close at these levels, you're looking lower. So nothing's changed. The initial target 35.67 on that break. We're past that. This is still pretty big. It's the 2017 and 2018 open and the 2017 high day close. That gives you basically a 35 handle, your next downside level of interest. The yearly low close is right there as well. Here's what it looks like on the intraday, okay? And here's what it looked like last night. So the idea was, or I'm sorry, this was back on the 23rd. The idea was look for possible exhaustion on a stretch towards that 618 retracement, 37.96, maybe even the September open. You didn't get either. that was as close as you could get. We pulled back right into that 618, really nice bounce, opened the week. We talked about this again yesterday, saying if we get here, be a decent area to look for possible exhaustion. Even if it were to stretch into intraday to complete 2 equal legs for a correctionary stance, better opportunity for a short there. Didn't get it. Okay, here's the overnight trade with the break back below the weekly open. Then it was just a sale. Okay, so where do we go from here? We're now trading right below this 35.67 level. Well, let's clean this up. This 618 now null and void. Clean that up. This 100% extension now null and void. Key support on the downsides right here. Again, that 35 region. Near-term resistance I'd have here at the median line, bearish invalidation. I dropped that to that swing high from last week that we made for the opening range high, 37 essentially, 36.93. It's going to necessitate not only a break above the median line, but also above the weekly open. So if you clear 36.90s, like, yeah, I could say we're bullish, even though we haven't necessarily broken the trend. So those are the scenarios on the recovery. The immediate focus right now is on what kind of reaction you get into 35. As you can see by the scalp targets, guys, I don't have anything below 35. If that breaks, we need to go back to the drawing board and really reassess the interior levels here. Basic focus right now is what happens here today or tomorrow. Questions on sterling? Do get GDP rate. This is gonna be the final read for the second quarter. Again, that comes on tap tomorrow, Thursday, excuse me, from the UK. But what a massive move. And again, like I always tell you, professionally traded market, and you can tell that just by the way that it moves. Here's sterling on the weekly charts, on the daily charts, right? Look at that break. It looked like he had ripped multiple times above that key threshold. How many intraday fake outs did you get before the move lower? Again, the consolidation focus, really clean break if that's it. 35's key support for sterling over the next 24 hours. That is number 7. Any questions on British pound? All right, moving right along, here is Aussie dollar. So our last update on Aussie was also looking at something rather radical in that you saw a topside break of descending formation, right? Here was the real short-term channel was holding for multiple weeks, essentially all of September. Here's the topside breach, faltered right to 38.2. So it's kind of been this game in Aussie. Are we going to break higher for a larger correction? Is that the blow off and we're actually going to break lower again? Well, dollar strength has continued to put a cap on this. Here's what Aussie looked like on the daily chart. Here's what Aussie looks like now. See anything interesting? It's the same range. This was on the 23rd. This is 5 days ago. We're still sitting right between 72.22 and 73.28. It's still the same range within the downtrend. Remember, this slope line is the 618 of the interior range for that pitchfork. Really nice. Caught the lows, caught the highs. You know, we're in a range right below it. This is also the objective monthly open. So I kind of want to see this thing clear. Now, if today's candle were to close right at these levels, it would constitute an outside daily reversal off of the monthly open, mind you. That would be pretty decent for a short. Okay, not a trigger, but it's a conviction for the short bias, right? A bearish formation. I don't know if I can continue to sell into the range low here, which has continued to hold essentially all month since August of last month, right? Since the 27th. So I'm not really sure how to play this, guys. I'm going to be completely honest. Here's what it looks like on the intraday chart, and here's what the intraday chart looks like now. It's just range bound as can be. Now we've faltered and pulled back. Okay, still above that 72.23 mark. So what do we do? If you're holding a short on this, I would be tight. This is one of the trades where if you do have positioning, yeah, I would put like a trailing stop on it, because if it gets the runner, you're likely going to see 72 pretty quick. But at the end of the day, we have to be objective. This is the range lows for the month, period. End of conversation. Could you interpret that? No, I mean, you could interpret this again as a weekly opening range, but I think we're calling it too close. It's only Tuesday. Slow down, right? Slow down. Usually you'll want the range to, be on a Monday, Tuesday stretch, even into Wednesday sometimes, but I wouldn't say that's a break of the weekly opening range. Too early. Too early. Now, I give more credence to the fact that it's an outside day reversal. So sure, that is a bearish development, but certainly I would still want that close below 72.22 to validate that move. And then even if you do get that, you got, a fib confluence just lower. So Aussie's kind of been play it real near term. If you're playing within the range, you're probably having a great time, right? But the weekly chart, it's a huge region, huge support slope. So I think we need to give this thing a little room. Patience pays in these trades. Now, interestingly enough, I'm going to segue real quick. I didn't have an update for you guys on Kiwi. It's been some time. Let's see when the last Kiwi update was. Yeah, it's been some time. I haven't really been tracking this one, but here's what it looks like. Well, let me find our last update. Here it is from the 15th. So last time we looked at Kiwi we were heading into uptrend resistance, right? The longer term chart, this is the daily, was at downtrend resistance, but the scalp was at uptrend resistance. And that was the focus, is what we do around here. Here's Kiwi now, right? Side by side. Look at how many days we continue to test that. And what happened? It eventually held. Guys, this was on the 15th. Eventually held. Move lower. First level of interest, 70.40. We pivoted around that for a while. The rally tested those former swing lows it held. Here's the break lower. We're at the 618 retracement, 69.46 now. So what do you do here? Kiwi was another one that saw a pretty significant break in overnight trade. Obviously, it wasn't the same as pound, but or yen for that matter. But this is definitely an interesting move as it takes us back below the 75% parallel, back below the 50% retracement of last month's rally. Here's near-term support, 69.64. So could see a bounce here. You're looking lower, you know, essentially while below. Let me take you back to this chart. Here's the intraday chart, right? This is the same pitchfork, guys. This is the upslope, right? So here's the downslope, or here's the upslope support, I should say. It's still at the 69.15 region. So we're at Fibonacci support. I still think you could possibly get another stretch lower, but this is one of those trades where even if you do break and everyone's like, oh, we broke the 618, watch that slope. Watch that slope. What's another thing I was looking at with this? Bear with me one sec. I just want to see what this looks like. Okay, that broke and ran, so we don't need to worry about that. And the hundreds down here. So even if this is corrective, right, your next support zone from a lateral sense is down here at 69. Yeah, oh wow, and you have those swing lows. So this is the range of support, guys, I'd probably focus on for Kiwi if you are involved here. An area of interest for possible exhaustion, possible rebound. You're bearish below 70.40. I would just use caution in chasing this one. I haven't been highlighting it because I myself haven't been involved. I kind of try to only write about, guys, what I'm actually trading, so I can give you guys something that I have skin in the game, right? Interesting clip. Interesting clip. I mean, you can almost see this as a 1, 2, 3, 4, 5 terminus near term before near term correction higher, but use some caution. Low conviction for me is Kiwi. I've been more focused on what's going on with Aussie here to see if we hold that key range, and it's well defined. It's 72.22 on the downside, 73.28 on the upside. So that is Aussie and Kiwi, which actually might put an interesting play on Aussie Kiwi. Here's Aussie Kiwi with a break back above the monthly open. I was soaking this out this morning because I thought it was going to be a little bit more of a deviation play. Not getting the run through that I would want to see, but certainly something to keep in mind. We'll revisit this if something interesting comes up on the scalp, but I like to see those divergent plays sometimes. All right, dollar CAD, who's involved? Here's what's going on with Loonie. So it's interesting. You're seeing the dollar sort of rip, right, versus some of its major counterparts. Not really seeing that, well, at least until now with the loonie. So the dollar strength here has been kind of curbed earlier today. I was looking at this before the open. We couldn't get much of a pump here, but look at this on the weekly chart. Before we start, dollar CAD from 1,000 feet up. We're at slope support, right? We diverted this, or we adjusted this slope last week. Really nice on the upper parallels catching resistance. This is just a connection of the lows that you made there. We're trading just above the 52-week moving average. Uptrend support, downtrend support. It's all right here. The objective yearly opens 27.13. That's initial resistance. The weekly chart has this coiled higher lows, lower highs. Something's going to pop here. Here's what it looks like with dollar CAD on the daily chart. Right? Here's the monthly opening range. It remains intact. You're sitting on the monthly open. Today is poised to mark an outside day reversal off the monthly open on the back of a 5-day decline. That's all to say. This shouldn't be too surprising to see a little bit of a rebound. Now, whether this is going to be a pivot back above 27.13 or not, I don't know. But certainly from a timing standpoint, this was well warranted. I'm only looking for a little bit higher of a swing here into 26.94, 27 handle. So if this downside near-term channel breaks, that would be sort of a nice level of which you'd start to look, okay, for initial pop, initial resistance. It's the objective yearly open, okay? It's the 100% extension, nice pivot there. Remind you that the 1618 of that drop caught the lows. So the 100% extension may be a nice, decent resistance zone. That converges on the upslope. Bottom line, looking to see what we get here. I'll wrap it up if we get up there, but that's what I'm looking to see, a larger inflection point. If that fails, the easier calls, what everyone's been calling for. Oh, head and shoulders. People are calling double tops on this. People calling triple tops on this. You know, I don't tend not to really care, you know, but at the end of the day, I trade what I see. And even if this near-term channel has broke to the upside, sure, maybe a little bit higher towards 27 yearly open resistance, but I want to see a bigger reaction up there if we get it. It's a tell, guys, that the dollar has been ripping against some of its major counterparts, but CAD has really been keeping this one at bay. They suggest that the broader dollar rally might be a little tired, which is what our inclination was into the start of the week. But we'll continue to follow this as it goes. Any questions on dollar CAD? Okay, SPOOs. Here's what SPX looks like. So we went over the crude levels. Those levels haven't changed. Where was our last update on SPX? So there's dollar CAD. No change to the levels. We basically bottomed right here. Unbelievable. And now we're just breaking the channel. So could get a little bit more upside. Not looking for too much on this recovery. In fact, if you take a basic 38.2, maybe. Whew, that's clean. Right into the yearly open. Can make this stuff up. Beautiful. Beautiful. So just some food for thought there. All right, that's dollar CAD. SPX looked like this. Went over gold. Here's SPX. So I gave you guys the whole suite of this, of where we covered. Again, if we look at this from a weekly standpoint, I'm not sure. I think it was someone from this room yesterday at Daily FX was asking for the weekly chart, which I don't show very often, but here it is. Last week's close actually did keep us above slope support, but here we are yet again, right? So something to take in mind as we close out the week, that big tail closed higher. We close below that slope, that would be the first break of uptrend support you've seen, gosh, for quite some time. For quite some time. Pay attention to this into the close of the week. Here's the daily chart. Man, just so clean, guys. Do you remember we talked about this in the webinar yesterday? Former uptrend support turned resistance. We highlighted those swing highs that we made into the close of September, or into the open of September. 44.87 is what we noted yesterday. The high registered at 44.84 before pulling back. Too clean for comfort. And I don't think anything is written in stone yet, but if we are going to make another stab, that's what you would want to see. Here's what it looks like on the intraday. So it looks like we just broke uptrend support. Here's a basic channel off the lows. Nice divergence into the highs. So false break of this downtrend. Put it right back inside. And here's a break of uptrend support. So I'm starting to think these are the new amended targets. That's your near-term resistance. That's your breakout level still. I'm starting to think you got a little bit more of a problem here. Let me ditch this 38.2. Add the 50. Ditch this 618. Actually, no. Watch this zone right here. Okay, that's key resistance in my mind. That's what you'd need to breach to get that. This 100, that's the 1618. Leave it there. Near-term support. Okay, watch this today. Near-term support 4,400 right here into 43.95 is the 50 of the advance. So it's really near-term. If it's going to just pair half the move, you can still get that little drip. But this is a decent pivot in price that I'm looking at right here. So if we get the rally from here, a near-term recovery, 44.30s is going to be where slope starts to come into play. Gosh darn it. 40 right here, 44.30s. This is near-term bearish inbound. If you get through 44.57, I think you look for resumption. That's the 618 of the near-term drop, the 618 of the broader drop. And again, that would necessitate a break back above upslope support. Nice pivot. So some near-term levels of interest. But if we do break sub 4,400, the 618 takes you back into 43.75. Might be the fake out drop you want before everyone starts to pile in again. So I do think the risk is still for a little bit dribble, a little bit of a dribble lower here, guys, for SPOOs. Immediately today, right into the US Open, could get a lift off this 4,400 level, but you're still at risk below this region. Any questions on SPX? Okay, went a little bit longer today, but that's all I got on my end, guys. Do let me know if you have any other questions or trade setups you're looking at. But the themes of the day are going to be what's going on with the 10-year, what's been going on with the with broader risk in general with SPX. Still don't think this is updating, so we'll have to get that chart up and running. Nice pop in the VIX today, takes us back into that pivot that we've been coming into for the last couple of months. Very encouraging, guys. We got a lot of things on tap. So stay nimble, okay? The biggest play, I think, for the week is already starting to exhaust. As we head into tomorrow and the day after, people are going to be starting to tone down those positions to the close of the month. And again, we don't get non-farm payrolls, even though it's the first on Friday. So it's going to be really more about those core inflation reads, both from the Eurozone and the US. Stay nimble. I will be back with you guys on Thursday to close out the month. I'm telling you right now, you want to be light into that session. So if you have some FOMO and you're not in any positioning, I hear your frustration. This is where we come in the clutch, okay? Hold that back. There's plenty of opportunities to come. If you are holding some of these positions, yeah, I would just say start to clean it up. Don't necessarily bail, but make sure all your stops are brought into the money or better. And I would start fading. If you're looking at a move like DXY, which is at major support, or Euro, which is at major, DXY major resistance, Euro major support, yeah, I don't see a problem with fading that position. Here's Sterling punching the February lows. 35 looks on tap there as well. But get protective is the basis, okay? All right, guys, wrap it up there. Hey, you too, Jay, Aurelian, Kay, Kevin, Steve, everyone, have a great day, and I will see you all on Thursday. Cheers.